Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
This was an article that, of course, the headline caught my eye. So I thought we would just talk about it. Investors lost money on 14% of homes they sold in March.
Ouch.
That's March 2023. Nearly the highest share since 2016. Nearly the highest. So they, not exactly the highest. Okay. And it was a Redfin article. Now, this is what really caught my eye because I'm like sort of a techno geek. I noticed this up in where you put the URL and that little triangle with the exclamation point. This is Redfin. Redfin is like this huge tech. They claim to be a tech company.
Okay.
That little triangle with the exclamation point means their SSL certificate has expired and that nobody at Redfin has noticed or literally gone in and refreshed their certificate, which they can do. First of all, on our startup, on the Referral Cloud website, we have ours set up through AWS. It automatically renews. We don't have to do it. It does it. We set it up to automatically renew. Redfin has an expired SSL certificate. And then you want to go and quote data from their site, some random data that they put on their site. So I don't know about that. I just thought that was pretty funny that they claim to be a tech company. Okay. So what we're going to do is we're just going to jump right to this chart, which is pretty cool. This is the real estate investors lost money on 1 in 7 homes they sold in March. So we have 3 things here. The top one is the share of sold at a loss. Now, if you look at the bottom, it starts basically 2000. So it's like 23 years of data. And as you can see that almost all the time, investors, 90-something% time, make money when they sell a rental property. There was this period, though, if you look from like 2005 or 6, actually after it was 2005, it was like closer to like 2008 to 2012 where they didn't do that well. What was, Juana, that doesn't make sense. What was going on those years that they wouldn't make a ton of money if they sold a house?
We had the great financial crisis, the great housing crisis where people were having to short sell their homes. There were a lot of foreclosures. So a lot of homes lost value.
Okay. And then if you look at the second one, that red one, they put a different color to make it look different. It's the median capital gain. Now this is median capital gain. So, you can see at the end, it looks very cyclical. You go all the way to the right, which is now that it's going up and down because there's been volatility, in home prices. It's been adjusting like we said it would a year ago. Everyone's crash, crash, crash. We said adjust. It'll moderate. Some markets more than others, but nationally, 1 in 7 is not bad. I mean, people on average are making $146,000 in capital gains.
So something I want to have you consider. This is an investment. Now, can you do that in the stock market? Can you consistently buy stocks and make money? Because if you never lose money in the stock market, then you're amazing. All right. The fact that real estate is an investment for these people and they are continually making money except during this period of the crash, which was a real crash. This is pretty good. Now, they're not always making tons of money, but they're always making money.
This is one of my favorite things about real estate. Let's say I'm just going to use round numbers, and I'm not going to include any selling costs. Okay. Let's say you have $3,000 and use that $3,000 and you buy shares of stock. In order to make that $3,000, $30,000, your stock has to 10x. You have to 10x the equity to make it, right? Now let's look at a house. Let's use, for example, a $100,000 house. You go buy a house for $100,000, but you only put in $3,000, you get a loan for $97,000. And let's just say that it's investment property. So for the sake of the argument here, we'll say that your rent is exactly what you're paying. So your cash flow is 0. So you throw $3,000 in, you own a house, and you're not making any money on it, right? And so a couple years later, you say, forget this, I'm going to sell the house. And the house is now worth $330. And that doesn't even have to be worth $330, it'd be worth $327. So you sell or $127, $130, $127. So you sell the house. Now, remember, you owe the $97,000, that loan gets paid off, but you get the difference. You get to keep the difference, which is like $30,000. So you actually 10x'd your $3,000 because you leveraged it. Now, you're saying, yeah, but Todd, you can do that in the stock market. You got all these tools. Yeah, but most of those tools are super risky. Like you're just almost as likely to lose all your money as you are to make it back. But there's no chance, of that $100,000 investment going to zero. The other thing is a lot of these options and these investment vehicles in the stock market, they're tied to forced sales where you're absolutely, at some point they just take your money. They say, sorry, you didn't maintain a certain, equity position or whatever, and all the money's gone, right? Leveraged trades. I don't know that much about the stock market. I'm not I don't like day trade or anything. But here's the thing about real estate. You're never forced to sell. You can time when you want to sell that property. So if it's upside down, you just say whatever. And if it's cash flowing, it's upside down and you don't really care, right?
But the point is that with the stock market, you have a paper asset. With real estate, you have a tangible asset, which is the thing that we've been talking about for many, many years.
Yeah, like, I own a small percentage of Amazon. Well, good for you. What do you do with it? Does it pay dividend? Yeah, it pays like 0.5%. Oh, wow. What do you get at ROI if you use that money to buy a house? Oh, I'd probably get like 7%. I'd get even more money. And Amazon, like, remember when all the tech stocks were down, like Netflix was down 86%. I don't know ever if home prices have been down 86%. Okay, so here's the next chart here. This is the number of homes for sale owned by investors. And as you can see here, this looks very cyclical throughout the year, but about 10% of all homes for sale are investors. Now, the reason this has been going up is because of iBuyers, which is different from big institutions. These are like the Open Door and Zillow and Redfin. Zillow and Redfin aren't doing this anymore. But what were those companies doing?
So they were going out to regular buyers and purchasing the homes. They were maybe doing paint and carpet and then putting them right back on the market. They were trying to flip them.
Okay. Actually, shockingly enough, most investor sales are flips. You would think, no, but so many homes are by investors. But most people don't like try to time the real estate market. Because sometimes it doesn't work. Even if you think you nailed it, and then your money's sitting around. Because I guarantee you there's a bunch of people in 2019, which was the first time in recent history that the crash bros came out in force because inventory started to pick up a little bit. The economy was kind of like, maybe it's overheated. Maybe there's going to be, they were talking about recession. So the crash videos started coming out. And a lot of people panic sold when inventory got up because home prices stopped. And you start to have these like leading indicators that there would be softness in housing. And then, of course, we know what happened. It was kind of like a not great normal market. And everyone thought, oh, this is the peak. It's going to crash. And these people panic sell, right? And then here we are 4 years later, and people are like, oh, I can't believe I sold that house. It's, literally, I would have made all the gains, just in the last couple of years that it took me, 20 years to build up in that house.
Right.
So, but that's a kind of interesting thing is it's flippers. And flippers in most markets, they're having a hard time, aren't they? They
are, because remember, flippers are like day traders. So they don't have a whole lot of wiggle room. They need to turn and burn these houses as fast as they can. And in the current circumstance, that's much more difficult. So they'll buy a house for, let's say, $450. Maybe they'll put $30,000 into it. They'll put it on the market for, let's say, $570. And then, sometimes they're having to sell it for maybe only $500. And by the time you calculate their costs and their carrying costs and costs in and out and that sort of thing, they will lose money on that. Now, that's not to say that everybody's losing money, because they're not. But we are seeing people get hurt on that because, like I said, flippers tend to be like day traders.
Yeah, we have never, ever said you should buy a house now. We've never said, people come in and say, you're irresponsible for telling people they should buy right now. We're like, we've never said that. And you couldn't buy right now if you wanted. If everyone wanted to buy right now, you wouldn't be able to. The houses would disappear too quickly. You would be not able to buy. However, if you want to sell, we can help you with that.
That's
we can
right.
help you with selling the house. We can totally help you. Okay, here's another quote from the article. While a lot of large investors are holding on to their properties, iBuyers, instant buyers, are the exception. According to Stein, many iBuyer companies, including Redfin Now, ceased or slowed operations in the last 2 years and now trying to offload inventory. Okay, that's likely part of the reason that some markets where iBuyers had a large presence, including Phoenix, Charlotte, and Vegas, have seen an uptick in the share of investor-owned homes selling at a loss. Redfin shuttered its iBuying operation Redfin Now in November 2022. So, when people get up, when people look at the housing market and then they pick the markets with the highest price increases, Boise, Vegas, Phoenix, places like that, parts of Utah. And then they go, oh, well, this is showing that, iBuyers came in, ran up prices, and then now they're just trying to cover themselves. Remember, these companies lost billions of dollars between them, billions of dollars between them, and failing to make money in flipping houses.
Right. I mean, they did that for a lot of reasons, and we've talked about this before. One of the reasons is because they were looking at, they were just looking at the market on paper, so to speak, not really understanding the market, not really having boots on the ground, and that made a big difference. And they really had a hard time competing with the mom and pop flippers that had much better granular market knowledge than the big investors did.
Yeah, look, if you're the guy who's got to pull, or the gal who's got to pull the money out of your bank account to buy this house, you're going to scrutinize this deal. Now, remember the chart we showed you? 1 in 7 lost money, but 6 in 7 made money. So even in this market, people are making money. Now, it was much more difficult to flip houses 2007 and 8, 6, 7, and 8, really, because no one was buying and home prices were falling. So you'd have to acquire them extremely cheaply to be able to then hurriedly sell them, and you couldn't hold them very long. You had to turn them as fast as possible. Wanda, where is all the money made on a flip? Where do you make all the money on the flip?
You make all your money when you buy it, not when you sell it.
Yeah, it's acquisition cost. This whole thing where you watch HGTV and they go, oh, well, we just bought this investment property and it took, 7 months to completely, and they show you the beautiful granite countertops and all the crazy stuff. And do any flippers take 7 months to sell a house?
No.
Literally, from the time they acquire the thing, they make a phone call. They send out a text message. Go to the house, get it, pick the lock, go inside, and tell the guys tomorrow they're coming. And we'll tell them what to do when they get there.
Right. I mean, most flippers will turn the house within 30 days.
Yeah, and that's a significant, and they all basically are doing the same kind of rehabs, right?
Right. Yeah, so it's economies of scale. So you'll see flippers that have literally entire storage units or warehouses of different, floorings that they're using, the paint, the light fixtures, whatever it is, because they're buying everything in bulk.
Yeah. Anyway, I thought the interesting thing on the article was that it pointed out that the investors lost money on 14% of homes. But they could have just said investors profit on 86% of homes despite housing downturn, imminent market crash, and weakness in the real estate. Sales are down 30%, but somehow the investors still made 80%, 86% of all homes made a profit. But they didn't characterize it that way. They characterized the loss, that people lost money 14% of the time.
Right. So, interesting. Did you learn something? Was it fun? I hope it was fun at the very least. Please like the video, subscribe, hit the notification bell, leave us some comments, tell us what you think. What's going on in your market? Are people making money on flips? Are people even flipping at all? What's happening? Let us know. And we look forward to the next video. Bye.
Bye.